Ethereum price today is $2,742.76, with a 24-hour trading volume of $16 billion. Ethereum is down 45% in the last 24 hours. The current CoinMarketCap ranking is 2, with a live market cap of $328 billion. It has a circulating supply of 119 million ETH. According to our current Ethereum price prediction, the value of Ethereum will rise by 9.00% and reach $3,020.15 by March 14, 2022. According to our technical indicators, the current sentiment is neutral, while the fear and greed index is showing extreme fear. Ethereum recorded 40% green days, with 7.22% price volatility over the last 30 days. Based on our Ethereum forecast, it's now a good time to buy Ethereum. Based on today's classical pivot point, with the value of $2,569.88, Ethereum has support levels of $2,514, $2,442.56, and the strongest at $2,386.68. Similarly, Ethereum resistance levels are at $2,641.33, $2,697.21, and $2,768.66. To get a better idea of what could happen to the Ethereum price in the future, it's helpful to also explore Ethereum's price history. In the last month, the ETH USD pair is down -8.12%. The one-year performance of ETH USD is 58.46%. Ethereum continues to trend downwards, after the recent sell-off late last week, and could reverse some of the gains recently incurred. Ethereum bears seem to have complete control over ETH price after closing at the lowest point in 30 days of $2,485. Secondly, bulls have failed to support both the 0.5 and 0.382 monthly Fibonacci retracement levels. Today's price of $2,583 is floating above the 0.236 Fibonacci retracement level. Unfortunately, the 0.236 Fibonacci retracement level is not considered a strong level of support. The current Ethereum price action suggests more consolidation from the token is needed before the bears can ultimately grab liquidity lying under the previous monthly low at $2,300. There is currently no evidence of a bullish reversal for Ethereum price. Bears who profited early from this week's sell-off are likely to move their orders into take-profit zones. Thus, sideways action between $2,500 and $2,650 is very likely on the intraday chart for days to come. It is worth noting that Ethereum price seems to be printing a bullish morning star on the daily chart. This pattern will further validate the idea of temporary range-bound price action. Early buyers should be warned not to open large positions, as bears are likely to push price back to February's monthly low of $2,300. A daily close above the 0.5 monthly Fibonacci retracement level at $2,750 will be the first bullish signal to invalidate the pessimistic outlook. If invalidation occurs, then Ethereum price will likely see an increase of 10–15%, going back up to $2,870 and even $3,000. Ether is still in troubled waters after failing to break a 5-week-long descending channel top for the third time in a row. The March 2 test of the $3,000 resistance was followed by a 17.5% correction in 5 days, which signals that buyers are somewhat reluctant to defend the price. To date, Ether suffers from high network transaction fees, even though it dropped from $19 in mid-February to the current $13 per transaction. While this is less than peaks seen previously, $13 per transaction is still incompatible with most games, non-fungible token and even decentralized finance transactions. Even more worrisome than Ether's performance has been the total value locked TVL in Ethereum declining by 55% on March 8. Data shows the percentage of assets locked in its smart contracts reached an all-time low versus competitors. This indicator could partially explain why Ether has been in a downtrend since early February. But, more importantly, one needs to analyze how professional traders are positioning themselves, and there's no better gauge than derivatives markets. To understand whether the current bearish trend reflects top traders' sentiment, one should analyze Ether's futures contracts premium, which is also known as a basis. Unlike a perpetual contract, these fixed calendar futures do not have a funding rate, so their price will differ vastly from regular spot exchanges. By measuring the expense gap between futures and the regular spot market, a trader can gauge the level of bullishness in the market. Conversely, bearish sentiment tends to cause the 3-month futures contract to trade at a 5% or lower annualized premium basis. On the other hand, a neutral market should present a 5% to 15% basis, reflecting market participants' unwillingness to lock in Ether for cheap until the trade settles.
Feels heavy on your chest.